Today is Wednesday, July the 29th, and yes, we had a big day, and the Fed didn't do anything surprising, continues to signal that they are going to support the market, and you can see that the oscillator ticked up a little bit, so we've broken above the zero line convincingly now. The volume was a little bit higher than the previous days, but not as high as it was last Tuesday or most of the days the week before, or any of the days the week before that. But the volume of advancers to decliners was substantially in favor of the advancers. The summation index continues to tick a little bit higher. But what's hidden in all of this is that the charts are showing that the Dow Jones is stuck under the 8 EMA, as it has been for 4 days now, 4 days in a row. So the headlines are going to say, great day, market is strong, but really is it? You see that the Chiku span has bounced off of the top of the candles here. So just showing again how important the Chiku span is. And because it survived by passing underneath these 3 candles here, it should continue to be getting support from all of these candles. We could still come down and test the cloud in here and still have the Chiku span have support from these candles 26 periods behind. So all that is a sign of strength, but really seeing something that's not breaking out over the EMA is not really a signal of strength. The NASDAQ 100, same thing. Did finish a little bit above the 8 EMA, but again, still off of its highs. You would think that the enthusiasm we see, we're making all these new records, but frankly, we're not. The volatility index, a little bit lower. This is not necessarily a good sign. It just means there's no fear in the market, which is probably a time that you should have some skepticism and some fear in the market. The 8 EMA that was holding back Apple was breached, but look where it stopped, 150%. So let's take some arrows here and let's just show how important the Fibonaccis have been. Here you go, 138.2, 127.2, 150, 150. So the Fibonaccis are really important here. Is it going to go to 161.8? Well, now, of course, all bets are off because tomorrow is earnings. And when there's earnings, the technicals get pushed to the side initially in the initial response, but within a day or two, Apple will come back and follow the technicals. So we're looking for, if we have a surprise move Thursday night, tomorrow night, it could go to 392.47, but chances are it will come back to test 380. Caterpillar, very strong, but look at that. All it did was hit the 100% Fibonacci, which was back here on February the 13th, 2020, when it got rejected by both the 50 EMA and the cloud. Again, the technicals are just so important here. And this still is within the range of this Gartley pattern. You see, if we extend the Gartley pattern out, we've just only a little bit exceeded the acceptable range of this Gartley, but we are stopped at this double top. Home Depot did pull back today, but still a strong stock, one that I'm glad to be owning. AT&T, not so good. U.S. Bank was up $1.42, but let's take a look at all of the banks. Bank of America up 3.8%. Goldman Sachs, not so good. JP Morgan, 2.3%. U.S. Bank, 3.19%, 4%. Citigroup, 2.5%. So it was a good day for the banks because, again, the Fed is signaling that they are going to underpin the economy and they're going to underpin the banks. And here's Whirlpool, which is hanging around. It's 100% on this Fibonacci retrace, but we've got this B point. We've got this, this is a Gartley type shark pattern where X to A found a middle spot at B, that wherever that is not important. It's retrace that's important, and it retraced 61.8% below XA and found support there. And now it's on its way eventually to 200 and 260. So if you're looking for a long-term investment, you can buy whatever you feel comfortable in spending premium on, but you could buy Whirlpool January 2022 calls and just sit on it, because this stock is going to $202.60.